TFNN. Headline News Update. Here's Tom O'Brien.
Hi everyone, Basil Chapman sitting in for the vacationing Tom O'Brien. This is the 10 a.m. update brought to you every day by Everbank. And for more information on the products they offer, call 855-750-4051 or visit everbank.com/TFNN. Let's look at the market. The Dow's up 51 at 17,970. I'll do this if you're looking at my charts on Tiger TV. On the left is the daily, in the middle is the weekly, and on the month is the longer term monthly. On the right is the monthly chart. And we're looking at the Dow attempting to get to the 18,000s. If it can start trading in the 18,000s, that'll be a very, very important moment, because we've had strong resistance from 18,016 at the high of the 8th of June, and then again at 18,011 on the 23rd, and then we tried again at 18,002 on the 1st of July. This is the third attempt to try to get through. We'll see if it can do that. If it does that, that starts leg B in the daily chart, and the 18,167 will be the level, the target level, looking out. So let's go on, looking at the S&P, SPX.X, looking at the S&P up 7 at 2107. It has the same declining trend line. It needs to pierce 211 to 213. As soon as it does that, that resistance is very important. And in the weekly chart, going above 2120 will be the start of leg D. That'll be very important. I meant to say that the support in the Dow is at 17,920 to 17,890, and in the S&P the support is at 2098 to 2093. So those are the parameters to look at. Let's look at the QQQ. This is the Power Shares QQ Trust Series, trades with an NDX 100. This is acting quite nicely. It's not as good as the other, the Dow and the S&P, but it is in leg B in the daily chart. We're looking at 108.69, up 39 cents. It needs to get to the 111s to really break all that resistance from the downtrend line. So we're looking at that, and the support that's very important over the next 2 days will be between 108.10 and 107.70. Let's go on to, this is the gold contract. Trading down 10 at 135.6.9. You remember yesterday I was looking at this when I did the update, and I said that we're in leg E in the Chapman wave methodology, and I'm looking at the dividend type stocks, the interest rate type stocks, and gold as potentially having some kind of a minor pullback here. And we're getting that pullback. We're down 9 in gold. In the silver contract, we're looking at a leg D, and now it's a peak D, and I'm suggesting that at 19.79, you've got very strong resistance around about 20.30. But the most important thing is there's a chance that it could test the 19.10 to 19.00 level over the coming few days, if this is going to continue as a consolidation of the recent fabulous gains. High-grade copper is trading down again, just nothing there to see. It's just kind of on the sidelines in a trading band. But most importantly, if we look at the TLT, the Lehman 20-year T-bond fund, it is down from what I call a peak E in the Chapman wave. But most importantly, the parameters to watch is a spike into the 143.30s would be very positive, and it's at 142.25, down 31 cents. So a dollar higher, close a dollar higher, says, oh, that can go on a little longer, but I think there's going to be some kind of a consolidation. 140 to 138.70 will be the consolidation area if that occurs. If you're looking at the dollar, the DXY, the dollar is within a trading band, but it's at the higher level. If gold pulls back, there's a chance that the dollar could try to go from 96, where it is right now, towards the 96.50s. If it breaks above 96.71, that's going to be quite positive, because it extends the leg up in the weekly chart. Now, this is going to be something that we need to watch closely. Within the context of everything. Remember yesterday when we were looking at this, I said the volatility index is very important. It's down in the 14s now. That needs to remain. It needs to constantly keep moving down, and that's buying pressure for the Dow. So I hope this has been helpful. This is Basil Chapman sitting in for Tom O'Brien. It's the 10 a.m. update brought to you every day by Everbank. And don't forget, go to the front page for more information on the products, and go to TFNN, and you will find that right there. Thank you for being here. Have a great day.
Today, Many commodities are trading at relative lows. And now you can take advantage with Everbank's new limited time, 5-year, market-safe currency comeback CD. This indexed and U.S. dollar-denominated CD offers 100% principal protection and is based on the equally rated performance of currencies of Australia, Canada, Chile, Mexico, and South Africa. These 5 countries are especially rich in commodities, and their respective currencies are poised to do well should commodity prices begin to recover. Keep in mind that no APY, or periodic rate of interest, is paid on the CD. Don't miss out on this innovative new financial opportunity. CDs must be opened and funded by the upcoming July 14th deadline. To apply online and learn more about the CD, including product terms and disclosures, visit everbank.com/TFNN now. This advertisement is sponsored content. Everbank is a member FDIC.